Hey, good Friday afternoon. I'm Lance Hansen, and this is Real Estate with RE/MAX. We're on here every Friday afternoon from 1:30 to 2:30. We try to bring you current information on what's going on in the real estate market, take it from a national perspective, bring it down to a local perspective, and see if we can't keep you updated and informed. Today, I'm excited to have a guest. I've been trying to get him down here for, 6 months or so, whatever it is. But he's a busy guy, and we're going to talk about some of those things that he's done. But Les Solgrove is down here today and going to visit with us. He's a stat guy. He's one of these guys that digs into everything, puts it all together, and then we're going to try to figure out what the heck all that means. So we're going to be right back with you. Stick with us for a minute, and we'll see you soon.
From the RE/MAX Real Estate Concept Studios. Listen, watch, chat. This is WEBCAST 1 Live. Programs on WEBCAST1Live.com are brought to you in part by KDC Builders. Building custom homes for how you live. KDC will take your dreams and turn them into reality. Go to our website, kdcbuilt.com, or call Hannah Inman at 515-975-9990. And Tom Coates and ConsumerCreditOfAmerica.com. Are you overwhelmed with mounted credit card debt and feel there's no way out? Well, there is. Call 1-800-955-5765 for Consumer Credit of America. That's ccofamerica.com.
Hey, welcome back. I'm glad that you've joined us. Again, I'm Lance Hansen. This is Real Estate with RE/MAX. And today, we've got a lot of stuff to get through. We've got a lot of stats and things, and don't worry, it's not going to be boring. Because we have the stat guy in with us today. Les Solgrove is in today, and we've just got some things we're going to go over. We're going to bring them up on the screen for you so you can see some of the things that we're talking about. And the idea and the whole format of the show is to look back to predict what's going to happen in the future. So Les Solgrove, appreciate you coming down. We've been trying to coordinate this
Absolutely.
For a while,
yeah.
But you're a bit of a busy guy.
Well, it seems so this past year or so I have been. That's
Yeah.
correct, yeah.
So tell us a little bit about yourself and include the part of, where you were and then the new company that you started
Okay.
and then this new endeavor that you've just taken up here recently.
Okay. Well, for the past 15 years prior to my latest company, I was with RE/MAX Real Estate Group.
Mm-hmm.
And about a year and 6 months, about a year and a half ago, I left RE/MAX and started my own company, Iowa Real Estate Solutions. And Iowa Real Estate Solutions is kind of a double-sided company. One side I deal with is education to the real estate agents in our community.
Mm-hmm.
And the other side is I like you said, I kind of I'm a stat master. I love stats, love numbers, and so that's kind of the two things I do with that company.
Okay. So. And you do both of those services where you work with buyers. Is that correct?
Correct. Yes.
You're a buyer's agent.
I'm a buyer's agent. My
Okay.
company does not take listings, so I do just work with.
I know somebody who does. So in case
Good.
you run across something, I know you have virtually no contacts in the real estate
Alma,
world.
right?
Alma,
Yeah,
exactly,
right,
yeah. And if Alma was here, she could take them right now. But we're missing Alma right now.
Yeah.
She went to Atlanta to a Bosnian Mexican soccer match, which was just crazy. I actually tuned into the TV and watched some of it, and soccer is kind of a crazy thing anyway.
Yeah.
The fans are just voracious, and I think that Bosnia doesn't make the trip to the United States very often, and so they had a pretty spirited game down there, and they actually, her and Audis and some of their friends actually drove down on Tuesday, watched the game on Wednesday, and drove back on Thursday.
So a little road trip.
So yeah, so she may be asleep. I have no idea. I'm sure she's a tired puppy right now. Although I saw on Facebook, I think Otis ended up having to do all the driving. He made the comment that if he was a truck driver, he'd be making serious money. So shout out to Alma, and I'm glad you're home safe. So the other thing, I wanted to get into the other thing that you're doing now, because you took on a pretty huge responsibility for this year.
Oh,
so let's that thing. Let's
Yeah.
talk about that just a little bit.
I'm assuming you're talking about the Des Moines Area Association of Realtors.
Yes.
Yeah, I am president this year
Yeah.
of the association, and it happens to also be our centennial year. So we're celebrating 100 years with our affiliation with the National Association of Realtors. So yeah, I'm busy.
Yeah, thus the reasons our schedules didn't
Correct.
match up really well for a while. So okay. With that, and did Max get some contact information for you so that we're bringing it up on the screen? Okay.
Yep.
So we've got ways for people to get a hold of you, whether it be a realtor who is looking to define an area and statistics in that area, or working with a builder and trying to figure some things out there, or a buyer who wants some expertise in the area. You've done this for a couple of years.
Hit 20 years last September.
20 years last September. So you're almost as old as me in real estate years.
I think I'm going to make it in this business.
You think? Yeah.
I
Well,
think so.
it's always a day-to-day thing for us, right? So outside of that, we've got a lot of stuff that we want to cover, and I have to put my glasses on. It's just how it is when you've been in this business this long. Why that tends to be the case. So that's just the way it is. Anyway, so we're going to talk about these different things, and then we're going to try to bring them into what does that mean.
Okay.
And so one of the things, the first thing we're going to talk about here is active listing trends, and that's just the number of active listings at any given time over a period of time.
Correct. Yeah.
So Max, if we can get that first one, active listing trends, up on the screen, and we can talk about that just a little bit. So tell me what these things mean.
Sure. Well, if you notice over on the far lower right-hand corner, you've got our January active listing inventory is at 5,086, and that's actually a number we haven't been at that low since December of 2009, as you can see, when we were at 4,900. And what this chart shows you is kind of this ebb and flow as the year begins and continues. We kind of have a surge through the middle of the year where it kind of makes sense when buyers and sellers are out and sellers want to put their homes on the market. And then near the end of the year, it kind of tails off. Well, at 5,086 listings on the market right now, this is a tremendous benefit for sellers because there's less inventory, less competition for them. So, it's like I said, it's a good time to be on the market.
Yeah, it looks like it because the numbers are down. And obviously it's the supply and demand. It works in real estate just like it does of apples in the grocery store.
Absolutely.
That's interesting. Is down. I mean, if we look back into the 2007, 2008 years, just huge numbers of listings.
Well, and you know what? That kind of reflects that real estate bubble that we all talk about, and what we hear about is when the bubble was there, obviously there was the demand, and also there was a lot of money available for buyers at that time. So, the more buyers, the more potential for sales. So,
all right. So we know that we're down a little bit. So, we know that's a plus for sellers when there's some limited inventory.
Yep.
And then we're going to break that down a different way on active listings by price range.
Sure. And that's great. The next chart's up there. You can kind of see that the bulk of our inventory of those 5,000 homes is between that $100,000 and $200,000 price range. And that's also kind of the most popular price range for buying as well. That's what we've seen over the past year. But so if you've got a home that you're thinking about putting on the market, and it's between that $100,000 and $200,000 price range, this is, you're going to be right out there with everybody. So,
So yeah, you're going to go in the mix, and like you said, that is the most active of the price ranges, and turns over more.
Correct.
So, I think, and we're going to talk about the months of inventory here in a couple of slides.
That comes
down.
up here in a couple down.
And that'll show us some of the terms in there of how long those properties are on, what kind of turnover we get for that.
And we'll talk about supply and demand and kind of what the market has done in the past and where I think we're going to be in the next year or so.
So when we look at this active market by price range, so we get the next two are just below and just above.
Correct. Yeah.
That range.
Mm-hmm. Yep. And that 1,134 figure you see there in the blue, that represents the under $100,000 price range, and that, whether the market is good or bad, that's been a steady market no matter what, because it's typically your first-time home buyer market. Also a lot of the properties that are maybe not in good as condition are also maybe into that price range. So there's maybe some investor activity in that price range as well.
And do you do any stat work in looking at investors and how much of an impact they're having in the market at any given point?
That's really hard to track right now. I don't. We've got some new software coming out at the Association of Realtors office here sometime later this year that we'll be able to track a little bit better some of that numbers as well as foreclosure data. So, if I do a good job today, have me back.
Yeah.
And we'll talk, about maybe some of that data as well.
Okay.
So.
And at this point, I mean, it looks when you see that many homes, you're like, oh my goodness. I mean, how's my house going to work in there?
Yeah.
And towards the end of this, we're going to discuss that a little bit. But the idea is that listings overall, the overall numbers are down, but they're down as a whole. The percentage breakdown of those listings is not like an overabundance in one spot or the other.
That's right. There doesn't appear to be one price range or another that is down more or up more. It's just an overall stat. And like I said, at 5,086 listings out there, that's great if you're a seller. And frankly, if you're a buyer, it kind of gives you a little bit of motivation to maybe make some decisions.
Mm-hmm.
So.
Yeah, and that's the whole thing. We go from that market of how many months of inventory is on there, and that's sort of the breakdown of whether it's a buyer's market, an even market, or a seller's market. Right. And we kind of teeter back and forth, almost in some areas actually neighborhoods. Yeah. Are buyers markets and sellers markets. And
absolutely.
So there's a lot of little intricate things within all of these big numbers.
Right. Yeah. The numbers that I really am going to talk about today are as a whole. You can certainly find pockets of the city or pockets of an area or outside of the city that are essentially a buyer's market or a seller's market, maybe where there's less inventory.
Yeah.
But as a whole, the numbers I provide you today are kind of, we're talking in that direction.
Talking in general, the greater Des Moines,
right.
ML Exchange, DMAR, Des Moines Area Association of Realtors, those areas that we're working with.
Kind of want to throw the old golden circle.
Yeah.
If we think back,
the newspaper term, I think is where that came from.
Or the tri-county, Polk, Dallas, and Warren counties, that kind of thing.
Yeah.
So,
yeah. Okay.
So.
Okay. And the next one that we're going to go to is the pending comparisons, and we showed that a lot on the show over the year.
Yeah.
Last year, just watching to see were we going to mirror, and the surprising fact with this chart is just how much effect the incentives that were put out by the government.
Absolutely.
And I should preface this by saying that since June 1st of last year, that's the first time that we've gone without an incentivized market for years.
Yeah, we're off the medicine.
Yes.
Yeah.
And we're kind of on our own and balancing out to figure out where we're at. So let's talk about these numbers just a little bit.
Sure. Now, what I want you to focus on first here is the red line.
Yes.
And that is 2010 pendings. Now, this is the number of offers that have been accepted but haven't closed yet. And this is also a cumulative number. So when you're looking at maybe some other stats, you see we only had 300 and some or 400 and some pendings. Well, if you look today, it says there are 800. Well, this is a total of pendings that are out there. These are offers that were maybe written in November, December, January, and now into February. So this is cumulative. And what's interesting is that first 4 months of last year, you see that huge spike. That's the huge mountain of activity that we had as the stimulus was ending. And then May 1st, this was like everything just kind of fell off, and you can see there's a tremendous drop back off.
Yeah, it literally just stopped.
It literally stopped.
Yeah.
And, as of about July or so, it started to level off. And that's where we started to find what I am terming our new normal. And so that kind of was normalized throughout the rest of the year. The blue line is 2009 numbers. And the only reason why I include those is because it's kind of nice to compare not only last year, which was under the full stimulus and the ending stimulus, but also look at 2009, which again was under a stimulus. But comparing the two of those to what we're currently doing, and now in the lower left-hand corner, you see that green bar that's starting to rise. That's 2011 pendings. And what's very interesting there is that we are beating 2009 business, and but we're still going to be behind 2010 business. And I think I told the registry yesterday, I don't expect us to hit levels of 2010 during the first quarter, because that was such a odd period of time with that stimulus. So what I kind of predict here is we're going to, as long as we beat 2009, I'm really happy, because that was stimulus area 2. And then as we get past that April 1st date, I would love to see this green bar continue to surpass 2009 numbers. Not sure we're going to, but definitely I think we're going to be way above 2010 numbers as of the last 3 quarters of the year. So
yeah, it's actually I hadn't seen the first chart this year. Not because you didn't make it or put it out there. I just didn't take the time to look at it. So this is the first time I've had an opportunity. And some of this at the beginning of the year is that we just had a tremendous December. I don't know, it was an unusual December in that there was a lot of stuff that happened.
Well, there was a little more activity, I think, in December because of the weather. If you remember a year ago, November and December,
oh, it was terrible.
I'm sorry, December and January, we saw white snow.
Yeah.
And that's about all.
Yeah.
And we've had a mild winter so far. The groundhog's playing with us this year, so we should have an early spring, and that's all helping, I think, as well as consumer confidence is back.
Yeah, I think a little bit. Yeah, we're feeling a little bit. I know phones are ringing and people are active and that kind of thing.
Yeah.
So I'll tell you what, we got through our first 3 charts, and we may have to reference back to these as we talk a little bit. Yeah. But what we're going to do is we're going to take a short break, thank some of our sponsors, and we'll be back in just a few minutes. And thanks for tuning in and streaming along with us.
Yikes, when it comes to getting your carpet clean, don't just pick another name from the phone book. Call the company you already know and trust. From Springer Pest Solutions and Springer Handyman comes Springer Carpet Cleaning. Springer uses the best equipment available. No one can clean your carpet better. And with Springer, there's no hidden fees and no add-ons. Springer cleans your entire house the right way. We even return for spot cleaning throughout the year. Stick with the name you know and trust. Call Springer Carpet today.
From the RE/MAX Real Estate Concept Studios. Listen, watch, chat. This is Webcast One Live. Programs on WebcastOneLive.com are brought to you in part by KDC Builders. Building custom homes for how you live. KDC will take your dreams and turn them into reality. Go to our website, kdcbuilt.com, or call Hannah Inman at 515-975-9990. And Tom Coates and ConsumerCreditOfAmerica.com. Are you overwhelmed with mounted credit card debt and feel there's no way out? Well, there is. Call 1-800-955-5765 for Consumer Credit of America. That's ccofamerica.com.
Hey, thanks for coming back and streaming along with us here at webcastonelive.com. This is Real Estate with RE/MAX. I'm Lance Hansen, and today we're spending some time with Les Solgrove. And Les is just all about, getting numbers and statistics and bringing them into some kind of a format that we can use them. And the format or the premise of the show today is looking back to predict the future. And it sounds a little weird, but that's actually what stats are for and what they're used for. So, Les, that's kind of your thing. You like looking into the past to help predict where we're going, what's likely.
That's right. I drove my DeLorean in today. This is Back to the Future. So
there you go.
Yeah.
You flew in, huh?
I did. Yeah, 87 miles an hour.
Yeah.
So
And there, certainly these are stats, and these are real estate stats that you draw out of a number of different resources, but there's just a huge amount of other factors that become part of this. There's the factors of interest rates and pricing, financing ability, new construction, all these things that come up as part of this. So one of the things we're going to go into here next is a thing called the months of inventory comparison, and this is something new for you.
this is right. Yeah, this is a new chart I've put together. Now, trust me, I don't stay up at night, 3 a.m. coming up with this stuff, but I just basically think back of what are people talking about, and right now people are talking about supply and demand and how much, whether we're in a buyer's market or whether we're in a seller's market. And, currently, as you can see by the far right green bar, we're in a buyer's market. We've got a little over 10 months of inventory. And to define what's a buyer's market and a seller's market, 1 to 4 months of home inventory is considered a seller's market. And that's where typically prices will appreciate a little bit because, if you've got less inventory, that kind of drives the price up because there's more people out there looking. A buyer's market, on the other hand, is where you've got more inventory, and we define that as 7+ months of inventory. Mm-hmm. So when you have more inventory than maybe you have buyers, then the buyers are kind of in control per se. And so as you can see right now, we're about 10 months worth of inventory, and that falls within that buyer's market. So looking back over the past, the very bar across the top, it shows the tax stimulus period there. There's kind of a red and blue bar at the very top. Mm-hmm. The red portion of that is the original tax stimulus. That was that one that was for $7,500.
Right.
You had to pay it back. And there was some confusion. And then around late 2008, early 2009, they came out with the $8,000 stimulus package where you didn't have to pay it back. And what you can see there in 2009 and 2010 is, in fact, in 2009, the market actually went down into a pretty fairly normal market there. We had between 4 and 6 months or 5 and 6 months of inventory. But if you look into that first quarter of 2010, when the stimulus was ending, that's when the frenzy was, and you saw that huge spike in pending sales. Well, it's almost an inverse spike now on the chart there. We actually went for 1 month there. We went into a seller's market again, and that was really kind of fun for agents that were out there selling.
Yeah. Like, hey, this is kind of fun.
Yeah,
We're actually selling stuff
like the old days. So,
yeah.
Then of course once it turned off, it kind of went back. And so, where are we going to be in 2011? My prediction is probably going to be just slightly above an even market.
Mm-hmm.
If we hit somewhere between that 6, 7, maybe 8 months worth of inventory. So.
Okay. All right. Well, that's good. And hey, folks, direct from Atlanta is Alma. Alma has made it in after driving all night, basically.
Yeah.
So welcome. Nice
Thank
to have
you.
you
Thank
back.
you.
And
it's nice to be back.
Yeah, I'm assuming you had a good time. Soccer
I
game.
had a wonderful time.
We were talking about that a little bit earlier. That,
Oh, you were?
I had watched some of the game.
Mm-hmm.
I had to watch it on the Latin channel because that was the only one. So I didn't understand anything, but I did watch the game.
Yeah,
And it was heartbreaking because you and Otis were down there. So of course I was pulling for the Bosnian. And
And
Otis
we lost.
but I think I still believe there was a bad call involved in there. I'm sure Otis would have.
So
a
is
lot
soccer
to say.
with a round ball, or is that what kind of ball?
The correct terminology is going to be football.
Football. Okay.
Exactly, but it's soccer.
It's
yes,
soccer
it's
in the
the
United
round ball.
States. Football everywhere else in the world.
Right.
It's
It's
football.
football because you use your foot to kick the ball.
Okay.
And instead of, the hand to toss the ball.
Okay.
Just pointing it out.
No, that's all right.
Yeah.
We can all use a little education.
Yeah.
That's
I was just giving you a hard time.
totally fine. Totally fine with that. So anyway, welcome, and we're glad to have you. And Les and I, we've been going over, he's the chart guy.
The chart guy.
And so we're going over lots of charts and talking about how those impact the future of our business. And so the next chart that we're going to pull up, it's called Cycle of Investments.
Correct.
And I have no clue.
Yeah.
What that one's about. So you're going to have to really explain that one.
Well, I hope I can do it justice. Cycle of investments. If we can see that here up on screen today.
Yep.
This comes from a gentleman named Steve Harney out in the Long Island, New York area, and he explains that when you're investing, whether it's in real estate, in gold, or stocks and bonds, there's this cycle you go through, and the cycles you go through are from optimism, excitement, euphoria. Then you have that second guessing of yourself, and you go through denial, fear, panic, despondency, depression, and it kind of picks back up again. And if you think of the real estate market back in 2006, we were kind of at that euphoric stage.
Yeah.
And were you euphoric in 2006?
I was thrilled plumb to death. I was making money that I shouldn't have made.
Buyers were euphoric, sellers were euphoric. Yeah, so we were kind of at that euphoric stage, and it also happens to be the point in time where you also have the maximum risk of investment because everybody's buying, they're tripping over each other. So it's that old adage: buy high, sell low.
That's my investment strategy.
That's right.
I buy high and sell low, and I'm surprised I'm not retired already.
Yeah, so you should be buying low and selling high.
That's
the idea.
That's where I'm missing out.
So really what we've seen here is now we're kind of at that low end of the scale where it's between despondency and depression, that low end, but it's also where the maximum opportunity lies. Some of the best deals in real estate are out there today. You're setting yourselves up for buying a house today with future appreciation. You're going to buy low and maybe be able to sell high later down the road. And on this chart here, you kind of notice if it was up again there that we show that there's a little X between depression and hope. And that's kind of where we're at. We're kind of on the way up to optimism. So this cycle is kind of repeating itself. And Steve Harney at keepingcurrentmatters.com, he's a hero of mine, a good friend of mine from Long Island.
Yeah.
And he's got a blog site. I follow him if you want some expert stats. So.
Okay. And hopefully, we won't get into the euphoric, crazy stage that we were in. I mean, that was wonderful, but if it takes the what would you call deregulation or whatever it was that the investment companies wanted to call it, but that like anything goes attitude that just kind of threw us into this.
I want a
crazy
euphoric state just for a little bit.
Just kind of so you can say I've been there, done that. I totally
just
understand.
A little bit.
I totally understand.
Well, and trust me, we're going to hit that again at some point. It's not going to be next year, but in some point down the road, we'll be back in that stage because it's all cyclical.
And I'd say with that, when it says investments, and there are some investors out there right now that are absolutely euphoric. Mm-hmm. They recognize the investment strategy right now of the buy low, sell high.
Absolutely.
That we're right in the thick of that.
Absolutely.
That the likelihood of our market falling much lower is pretty thin.
Yeah.
And so they're getting in. I know, Alma, you've sold to 2 or 3 people places that are discounted tremendously.
Tremendously, yep.
And so you've gotten some of your people just said, look, now is a good time to get in and do that, and I think that's just superb advice to just tell people, almost kicking and screaming, to the door, going, look.
Right. National economists are saying buy a house now, and they're taking their own advice. Even Donald Trump, for example, is even out there saying, now is the time to buy. If you don't buy now, 5 years from now, you're going to be looking back and saying, the Donald told me I should have bought.
I am now buying at 20% higher rates than what I could have. So. And that goes along with the whole thing that I know one of our guests that we have here quite often, Steve Schraderbacher, had posted that right now the market would have to fall another full 10% to make up for the 1% rise that most economists are predicting in interest rates.
Absolutely.
So the deal is that if you get in now, before interest rates go up, even if we had a little bit more downturn of the market, and in some areas I think we will have, in some areas I think they're done and on their way back up. Depending on neighborhood. Of course, West Des Moines, I'm sure, is ready to just take off, right?
Oh, it already has.
Okay. These West Siders,
Yeah, I heard you were on the West Side here a couple weeks ago. How'd you get across the river?
Well, like I said on the Facebook post, it was dark, and when it's dark, I'm allowed over there.
I see.
And because they don't check ID after dark, they let us East Siders.
No passport needed then.
We can cross the river then. So it's just a real dynamic right now, and the idea that you can buy a literally undervalued home, and that's almost across the board. It's from normal owner-occupied homes who those sellers have had to face reality that, look, we're not going to get the kind of money out of it that we could have, 2-3 years ago. But
on the buy side,
absolutely. And then certainly there are plenty of short sales, which I know Alma is so into short sales.
I know.
That's kind of her thing.
They're just my favorite.
Yeah. She loves to work short sales. And
they're the worst. I just hate short sales. I don't know why they even exist at all.
Well, they're a part of the market.
We do anything we can to try to save the banks for some reason. I'm not sure why. At some point you'd be like, whatever, just foreclose on them and lose your butt. But we continue to try to work and help the clients out and get them out of there with a minimum of damage to their credit. And it's thanks to agents like you, Alma, that sell those short sales. It makes life a lot easier for a lot of those people. So, congrats on that. I mean, it really is nice of you to do that, because she's not in this for the money.
I never was.
Yeah. And the other part of that is short sales that are out there,
correct,
which are obviously have to be discounted because there's some intrinsic unsureness in a short sale of the, is the bank going to accept, and how long is it going to take? And, the typical fashion, they wait for a long time to finally say okay, and then they want it closed in like 10 days.
Yeah. Hurry up and wait.
Yeah, exactly. You
Or
wait,
hurry up,
and then
actually.
it's like, okay, go. And so you have to have everything ready. And then the foreclosure market, that's out there, because they haven't opened the floodgates of foreclosures, but I think they're starting to just let it roll.
And that's interesting. I was on the phone yesterday or a couple days ago with Kevin Shetler from Wells Fargo Home Mortgage, and I was asking him, because the media is asking me as well about foreclosures, and my question to him was, at Wells Fargo, do we think that Des Moines is going to have this large amount of inventory come on the market with foreclosure properties? And his answer was, I don't see that happening in Des Moines. I mean, the properties that are coming on, obviously at 5,086 listings, we're not seeing this huge flood of inventory. And he doesn't think we're going to see a lot of that in Des Moines. Now, other markets, Arizona and California and Texas, obviously.
Sure.
But locally here, there's going to be some, but nothing that's probably not going to be able to be absorbed within our current listing inventory.
Okay. Yeah, and with it being down, that really is a good sign that with our inventory down, or at least at a relatively lower basis than we've seen in the past, that we probably could actually absorb some shadow inventory if we had it. So.
And we learned all these new terms: shadow inventory, short sale.
Yes,
in
all
the
of a sudden,
last 2 or 3 years.
Yeah. It wasn't that long ago that foreclosure. You're like, that was every once in a while you'd run across one.
Yeah.
And there were more REOs of transferring people and stuff than there were of foreclosures, because the ability to sell and get out of them was high.
Yeah.
So, okay, one of the things that goes hand in hand is that mortgage rates, have a huge influence on the market, and it's not. We always have a market. We always have the people that are getting married, having kids, graduating from school, getting new jobs, getting divorced. I mean, that is always an ongoing market.
Sure.
But the excess of that, those things are driven somewhat by mortgage rates.
By mortgage rates,
so you've got a chart here.
Yep. One more chart
that just talks about mortgage rates and what's happened to them over a period of time.
Yeah, and really what this one represents is from January of 2010 to date. You can kind of see where we were beginning, about May of last year. Some of this interest rate drop was fueled by government stimulus as well. They were buying up some of the mortgage money and insuring that at a lower rate, whatever. And so therefore, interest rates were driven lower to historic levels. We keep talking about historic levels of interest rates. But you can see that as of about late November, early December, they started back up again, and they went up fairly quickly. They kind of went up in a step there to December to around 4.25%, and now we're up closer to 5%. And, are they going to continue to rise? Probably. At what rate? Probably a little slower here. I mean, but are we looking at 6.5%, 7% interest rates in the next year? I don't think so.
None of the economists that we talk to have any predictions of having these, like rates are spiking or anything crazy like that.
Right.
But virtually all of them are predicting that we're going to have some rise. That rates are going to go up a little bit.
Yep.
And that is exactly what we were talking about earlier, is that we're kind of almost in that perfect storm of the rates are still good, prices are down, affordability's up. So that if you're in a situation that you should or could buy a home, or if you're an investor, those things right now is just an excellent time to get in there and play.
And the skeptics out there would say, "Oh, you realtors, you're all out there just trying to stir the pot and make us think this is a real good time." Well, there's going to be those skeptics, but literally, it is probably one of the best times to be purchasing real estate.
Yeah, I mean, statistically, without all the fluff, and certainly, Alma's one of those, you know, she's always peppy about the market and you should buy now and that kind of thing. You know, I'm much more of a doom and gloom guy myself, but the idea right now is that if you just look at it in a whole big picture, it literally is right there on paper.
It is.
With where we're at historically with pricing. I mean, our pricing has dropped down now where we're back in, you know, some areas as far back as 2002 in pricing, and then up into 2003, 2004, maybe 2005, depending on area and demand.
Yeah.
But still, you know, it's like the sales that they have at the furniture store, and it's like, hey, we're going to go back and, you know, have pricing from 5 years ago, and everybody's all like, whoa, that's awesome. We could go buy 5 year ago pricing. And the same thing on cars. But when it happens to houses, everybody's like, well, I don't know, I'm not sure about that.
Yeah.
And so it's a little bit different. So I tell you what, we're going to have to take another little short break because, you know, we got to make sure those sponsors get our thanks and that kind of thing. So we're going to take just a couple of minutes here, thank some people, and we'll be right back.
Yikes, when it comes to getting your carpet clean, don't just pick another name from the phone book. Call the company you already know and trust. From Springer Pest Solutions and Springer Handyman comes Springer Carpet Cleaning. Springer uses the best equipment available. No one can clean your carpet better. And with Springer, there's no hidden fees and no add-ons. Springer cleans your entire house the right way. We even return for spot cleaning throughout the year. Stick with the name you know and trust. Call Springer Carpet today.
From the RE/MAX Real Estate Concept Studios. Listen, watch, chat. This is Webcast 1 Live. Programs on WebCast1Live.com are brought to you in part by KDC Builders. Building custom homes for how you live. KDC will take your dreams and turn them into reality. Go to our website, kdcbuilt.com, or call Hannah Inman at 515-975-9990. And Tom Coates and ConsumerCreditOfAmerica.com. Are you overwhelmed with mounted credit card debt and feel there's no way out? Well, there is. Call 1-800-955-5765 for Consumer Credit of America. That's ccofamerica.com.
Hey, welcome back. And just want to thank you for streaming along with us here at webcast1live.com. I'm Lance Hansen, Alma Skuljic here, and we are Real Estate with RE/MAX. We're here every Friday afternoon from 1:30 to 2:30 just to get you up to date on the latest things going on in real estate and all those ancillary things that are part of real estate. And so today we've brought in Les Soulgrove. And Les is a stat guy, a buyer's agent, and we're going over a lot of those things that, you know, stats and what's it mean. And so we have a couple other things that we're going to talk about, and we're going to talk about the price range stats now. And so tell us about what this means as far as...
Sure. If you can bring up, they're good. We got January 11 home inventory stats. And this chart is kind of the one that got me started and got me interested in statistics for real estate. And Linda Busick was an appraiser who's retired.
Oh, yeah.
Love Linda. Man, she was just wonderful, and she helped me develop this particular chart. And what this chart represents is it's a great graphic if you're a listing agent and you're going out to list a property, or if you're working with a buyer and you want to show them what's happening in a specific price range. Now, keep in mind, now this is the overall Des Moines Area Association of Realtors numbers. So these same numbers applied to West Des Moines would be different than just for the whole MLS.
Mm-hmm.
But what this shows you is, for example, the price range that has the most number of listings is that 120 to 160 price range, where there's 1,008 listings as of the end of January. But in that entire month, only 83 properties went under contract in that price range. So if you've got 83 going under contract and 1,008 properties, that gives you about 12 months worth of inventory.
Mm-hmm.
It would take us 12 months at that rate to sell every single home in that price range, assuming no new ones came on the market. Okay, so that's real important if you're a seller to know that you've got to price your home properly. You've got to have it staged properly. You've got to have, you want to have your best foot forward because, 83 out of 1,000 are going to sell.
Yeah.
At least that's what sold in January.
And you
now these
wanna
numbers increase throughout the
Yeah,
year.
certainly these are January numbers, and overall January is typically just the beginning of the year.
Yes.
The startup of real estate. We've always said, well, I was down here saying, was it last week or the week before?
Mm-hmm.
That it was spring out, and of course Alma looked at me like I was on crack or something.
Wow. But you know what?
But that it really does happen every year.
Yeah.
Sometimes toward the middle to the end of January, all of a sudden people start milling around, and they're thinking, hey, tax return money to help offset that initial
Absolutely.
investment cost.
And people are getting a little, tired of being inside all winter long and looking at those same four walls inside the house. So
Yeah.
it gives them some incentive as well.
Paint or move.
Yeah.
Yeah.
So this is kind of a nice chart because it does kind of break down those price ranges. That under 80,000, as you can see on the 137 out of 696, there's a good example of 5 months of inventory. So if you've got a home on the market,
that's in which price range? I guess
that's under 80,000.
Under 80,000.
Under 80.
Yeah.
So if you've got a 1 or 2 bedroom starter home, those homes are going to sell quickly, and so price those accordingly and be prepared that you're going to have to probably put those sellers into something else quicker than as opposed to later. So
Right. Okay.
But,
we've got all these charts and lots of info,
Yeah.
and there's a place where people can go see some of this stuff, and I want to make sure that we give them that information because to look at it on the screen and hear about it and stuff, but when you go look at them and really study the different things, you really do gain a huge amount of knowledge. So the spot that they can go get these kind of charts and information that you put out.
it's a simple website. It's simplydesmoines.com. Simplydesmoines.com.
Okay.
And from that website,
Pretty simple.
You
yeah,
think? Yeah,
it's
exactly.
essentially my blog website. So when new stats come out, I post the new stats on the front page of that blog page. That's at simplydesmoines.com.
Mm-hmm.
And then at the top there, or off to the side, there's some navigations, and you'll see market statistics as one of the tabs. And you click on that, and you'll see all these charts that we've seen today, as well as historical charts going all the way back into 2009, first of 2009.
Mm-hmm.
So if you see a chart that you, for example, the home inventory stats chart we just showed you, you could go back and look at what were they doing a year ago, what were they doing in 2009, and compare those and kind of see what's going to happen as well. So
yeah, and you do charts. I mean that's the price chart, and then you also do an area chart.
I do. We didn't include it today because it was a little overkill. Obviously, how many
Well,
charts
yeah,
I'm going to show you.
There's a lot.
It's called the Market Pulse Report, and that one's real
I'm
popular.
always interested in that one because it breaks down the individual areas and how much inventory is in those. And
yep, and that one takes me about 2.5 hours once a month to just pull that data and massage those numbers into that format. And I do break it down by not only residential but also by condo townhomes. So because those can really skew the entire
Oh, sure,
market. So
sure.
if you live in Des Moines Northwest, for example, and you've got a residential property versus a condo townhome, you can go to that page and see, what's the average time on the market in Des Moines Northwest versus the entire MLS and stuff like that.
No, totally understand. And then the last point that we want to make is just, with all these stats and all these things that are out there, the reality is that overall, in general, we're still kind of in a buyer's market. I mean, there's still plenty of inventory versus the number of buyers who are out there.
Correct.
We hope that it balances out a little bit. But you came today and wanted to give, because you're a buyer's agent.
Yeah.
But you have some advice for sellers.
Absolutely. Bring up that last slide, if you would, Eric. Or Max, I'll call you Eric. You can be Eric today, can't you? Eric? Yeah. Max. I'm going to go back to Steve Harney again. And Steve this is probably my favorite slide that he produces. And he says that your price on your home must be compelling. Don't price homes competitively. And what he means by that is you want people walking out of your open houses or walking out after a showing, looking at each other saying, is there anybody else looking at this property? Or man, we've got to get to the bank. We've got to get, we need to make an offer on this. You want them to be compelled to make an offer as opposed to going, well, okay, that one's a pretty good price. Let's go compare it and see if it competes with this one.
Yeah, and those are terms that I think people would almost interchange. But the reality is that competitively means that you are priced within the market just like all of the others.
Right.
If that one is basically the same house and it's at 140,000, then to be competitive, you'd need to be at 140,000.
Yeah.
But what you're saying is look at that and say, okay, maybe we could be at 135. And we could, somebody would look at it after seeing a group of those houses and go,
Absolutely.
wow,
Yeah.
this is interesting here.
You want to invoke an action. You want to compel them to do something. And that's the point is, don't just make them go out and go back home and compare and write the numbers down and
Look through all of their paperwork and see all their different pictures and, and
compel them
forget
to do
which
that.
one's which, when you go out and show 10 houses. How many did you show that new construction 15, 18 houses
it was
in
about-
about 4 different cities, and they go home and they're like, which one had the black granite?
Yeah.
Because they're trying to remember.
Yeah.
So if they're remembering price-wise, they're probably less likely to forget which house that is.
And, obviously price is just one component. You've got to have it in good condition when there's a lot of competition, have it staged properly. That's another term that we've kind of brought about in the last 4 or 5 years is staging.
Staging, absolutely.
And I know you do a good job on promoting staging, but price, condition, and showability, those are the 3 factors.
Mm-hmm.
So
absolutely. Well, you know what? We go talking along here, and all of a sudden the clock's ticking, and we're starting to run out of time.
Well, perfect timing.
So I want to thank you for coming down and sharing some of this information with us. And Simply Des Moines spelled out, simplydesmoines.com
Correct.
is where you can go to find that, and whoever you are, and if you're from Des Moines and you're in a different city somewhere in the nation or in the world, you can look that up and get a real picture of what's going on here in the greater Des Moines area.
It's good information for both the public as well as local realtors.
Mm-hmm.
So I mean, it's a combination site. That's the idea. There's not a lot of hard sell on there either way. So go there as a resource if you're a realtor, or go there for information if you're the public.
Okay, perfect. And again, thanks for coming down. I know you're busy with all of this going and trying to sell houses, and then being our new Des Moines Area Association president.
Yep.
I appreciate you taking some time out this afternoon and coming in and sharing some of your wisdom with us.
Appreciate you having me, and let's do it again. It's fun.
It sounds good. Yeah, we'll do maybe a few months down the road. We'll take a look, and we can revisit back where we were today and
Great.
make some comparisons for when Alma is euphoric.
Yes.
Yeah. She's looking for that
I'll
euphoric.
leave you that slide so you can, that's where you want to be.
She can track her progress through
Yeah.
through that chart, right?
I'm in the denial stage right now.
Denial?
But
Okay.
it'll come back.
Yeah, it'll come back. So anyway, folks, thanks for tuning in with us. This is Real Estate with RE/MAX. I'm Lance Hansen. This is Alma Skuljic. And we're here every Friday afternoon from 1:30 to 2:30 and just bring you some information, help you make decisions on what you're doing, what you want to do, and maybe what you should do. So tune in again next Friday at 1:30, and we will see you then. Thanks again.
From the RE/MAX Real Estate Concept Studios. Listen, watch, chat. This is Webcast 1 Live. Programs on WebCast1Live.com are brought to you in part by KDC Builders. Building custom homes for how you live. KDC will take your dreams and turn them into reality. Go to our website, kdcbuilt.com, or call Hannah Inman at 515-975-9990. And Tom Coates and ConsumerCreditOfAmerica.com. Are you overwhelmed with mounted credit card debt and feel there's no way out? Well, there is. Call 1-800-955-5765 for Consumer Credit of America. That's ccofamerica.com.